fellas. Another podcast. How you guys doing? Good?
Good, good.
Oh, doing well, yeah.
Got a bunch of the old guys this time. Guys that have been in it.
Mature guys, we'll call
Yeah, sure. Aged. Like
Aged.
good wine.
That's even better.
Right.
Yeah,
Right?
yeah, yeah, yeah.
That's
Been
right,
in it for
mature.
a long time. I know that you've been in it since the 90s and you have too as well.
Yep.
So tell me a little bit about it. When did you get in? How'd you get in?
Back in 1999, I was recruited by a friend of mine that was, he just started out doing mortgages.
Want to move that mic closer to you too?
Closer.
Yeah.
He left the auto industry, got into mortgages, and he brought me in with him. You know, I just started kind of doing the back end paperwork, helping him process, submit his loans.
So you started like almost like an assistant.
Yeah, pretty much. I would set the appointments up. He would bring the appointments back. I'd have to find the lender, stack it, get it ready for processing, order anything like, you know, as far as the verification of employments or you know, updated documents or anything like that. Did that for about 6 months. Saw the opportunity to advance myself a little bit further, so I decided to part ways with him and venture out and start originating on my own.
Oh, nice.
And that was it.
Where'd you start at?
So I started with Union Mortgage.
Is that a different union than the one today?
Yes,
Okay.
yeah. And I don't know if I can I name drop?
Yeah,
So
sure.
Nick
As long as it's not
Mayer.
negative.
No, Nick Mayer. You guys may have seen his dealerships around Cleveland. Nick Mayer, Lincoln Mercury. He was the one that brought me in. And,
That's where Todd started too, right?
Yep. Nick had his hands in a lot of people that kind of started out in this industry. He was a good motivator, good sales, you know, tutor. You know, he was very aggressive, go-getter, you know, and he knew what he was doing. So
That's awesome.
yeah, so he brought me in, and that's it. The end
Who
of
do you
the
think was your first mentor?
So long term, to be honest
Yeah.
with you, I'd probably say Todd. You know,
Okay.
I mean, I've been with him for so long, and you know, he's had a lot of growth as far as the industry's changed. You know, he's kind of molded me along the way. So if I really had to put any,
That was like the first person that trained you and stuff. Or were you at the same time? Were you there first at mentor?
so I mean, after I left Nick and left Union, I went to Mortgage Placement Services, MPS out in Menor. It was night and day. You know, it was like a very structured, very well-run, smooth company. I mean, they were very, you know, very, very respected in the state of Ohio. In fact, you know, the owner of the company was the president of the Ohio Mortgage Broker Association at one point. So, complete night and day working with Union and Nick, working for Jimmy DiGeronimo.
Yeah,
totally
I
night and
think I
day.
met him before. Yeah.
But you know, along my path, though, I've learned to take the good
was about
and
to
the
say,
bad.
yeah, you got the
you
best
know,
of both worlds.
across, you know, what you pick up and techniques and structure and, you know, even the marketing campaign and how we went for leads. You know, it's totally night and day, totally different. You know, back then we actually had to send somebody to the courthouse to pull up public records.
Yeah, that's how you guys got marketing back then?
Yeah, right. So, and you know, in this time frame, you're talking about a lot of people were getting loans from, you know, like high interest rate companies, you know, on the street corner. I forget the name
Beneficial.
of it. Yeah, Beneficial.
Yep.
You know, and they were like 8, 9, 10% interest rates. So it was really easy to be able to find
Go pull their
opportunity.
card.
Yeah.
That's all I did back in the day. Go pull the card.
Yep.
Every beneficial loan.
Yep.
Is that what you
Give
guys
them
did?
a
You just go
call.
look for the beneficial loans?
Yep.
Got on the county records. Yeah, and just pull the card, and it's literally it's a card, an index card in a you know, a case like this, and you just finger through them. Oh, beneficial. There's one. Fidelity. There's one. You know, I forget some of the other ones, but they started out. Most of those individuals that worked at those places eventually came. The mortgage business wasn't that big, so they knew you didn't know where to go. So, but you had a Fidelity, or not Fidelity Mortgage. That's different, but like a Beneficial Finance, it was called. You had them at in your local strip mall, and so people walked in there, and then you're even lower than I would find. I'd find 15%. You know,
Yeah.
so I'm in the 90s, earlier
Yeah.
90s and doing that.
Yeah.
Yeah. When did you start?
Still for debate in my own brain, but 95.
Okay.
Yeah, is the I started off as an appraiser, doing you did what is it 2 years at 40 hours a week, so
Yep.
4,080
Internship.
hours. You had to have before you became an appraiser. And while I was doing that, a friend of mine who came from one of those finance companies, a lot of them did. We was working at a place called United Companies Lending. And he asked me, "Hey, you want to make home loans?" And I'm like, "Sure." So when we did, we went out to whether it was other mortgage brokers at the time, we were a lender, and or realtors, or more specifically home improvement people. Back then, I didn't know how to read a credit bureau, so I'd walk into their office and they said, "Well, you think you can do this one?" And they'd give me a credit bureau, and I'd look at it and pretend like I knew what I was reading because I had no idea what I was looking at. Because that was how the training was back then. They just threw you to the wolves and figure it out. So you know what? I think I might be able to do something with this. And I take it back, and Scott Miller's his name. He'd read them. He'd go, "We can do this one. We can't do that one. We can do this one. Can't do that one." I'd go back and say, "Okay, we can't do this pack. We can do this pile right here." And that's how it was. And then eventually we went down to the counties.
Yep.
You know, Summit County and Cuyahoga County was my friend. I actually knew the guy. I would know the bailiffs because they're always in there. You know, and I would, home because they would have, like for example, City of Cleveland Heights would have violations that would be on properties, and they'd have to go to housing court. So he would call me, and I'd go down there, and we did a subject to loan, it's called. But in any event, we would do a refi for them to do the home improvements because they couldn't do them. They didn't have the money to do it. But the City of Cleveland Heights required them to do it as a homeowner, part of their original point of sale inspection or what have you. But that's how we just did old fashioned public record searches, and then maneuver from there.
That's awesome. So you, where did you start at? You started at what?
United Companies
Company?
Lending is what it's called. Yeah.
Hey, can you stop that? No. Can you stop your thing? Can you turn your silencer on?
Oh, you can hear that?
Yeah. Bro.
Oh yeah.
Oh my god, I'm so sorry. I thought it was going to my glasses.
No, you're good.
Jesus. I'm
Thanks.
so sorry.
All right. Can you start it back up?
Yes.
Thank you. Go ahead.
So anyway, I started off at United Companies Lending, and we were at that point there were branches on the west side in Akron. I was in Beechwood. There was one up in Mentor, your area, and so we would do subject to loans. So it's ironically I would start to write a loan on a house in Cleveland, and before I got the appraiser out there, the City of Cleveland would knock the house down. So we didn't. The appraiser would call and say, "There's no house here," because Cleveland had started doing that at that time.
Yeah, for sure.
So just leaving these houses in disrepair.
In disarray, yeah.
Yeah, they freaking would knock them down. That happened more than one time. Often actually.
That's crazy.
And then, that company fell by the wayside, and
Yep.
kind of moved on. Yeah.
Nice. Remember who your first mentor was?
Mine was Scott Miller.
Oh, okay.
Yeah, he. We had known each other before that, and he had called me. So from there, I don't even know from there. We kind of did it ourselves.
You kind of did.
You and I,
that.
for example.
We went to where we all met was
all
at the
three of
Mortgage
us.
Zone.
We were talking about 2002.
Yeah, Riddle was the pricing manager when I got there too.
Oh yeah, you took everything to Riddle. Yeah.
That's crazy.
That was a long time ago.
Oh yeah.
Yeah, so I remember when I started there, where the Mortgage Zone is where we all were at the time. I remember you had to go in that training class where they taught you to do math basically, and then that's really what it was. It was like, dude, I did this
gotta
math
teach
when
you
I
how to
was
do math to come to
I
math.
did this math in 10th grade.
Right.
And then they teach you how to do math, and then you put it on a form, and then you go on the floor, and then you got paired up with some, like a mentor.
Yeah.
And then Riddle and Alfredo were the pricing managers. If you sat in the back half of the building, basically, you went to Riddle.
I went to
If you sat
Riddle,
in the front
yeah.
half, you went to Alfredo, and I would go to Riddle because I was in the back half. I forget that.
I remember I was kind of different because I had already come from loans, so I wasn't a rookie off the street. So I just would follow the rules as much as I could. But then they would give me some flack. But I still went to Riddle. They're like, "Why do you keep doing that?" I'm like, "Well, that's the rules." I didn't want the other guys to not follow the
Right.
rules, think they knew it, and they had no idea.
Right.
I had been around for 5 years for
Yep.
Yeah.
Yep.
So,
Yep.
and then,
It's always good though too, just to bounce ideas off each other.
Yeah.
You know,
Correct.
sometimes
you see things the other person doesn't see.
exactly. Especially when it comes to mortgages, the way I might see it might be different than the way you see it, and not saying that it's wrong or whatever. It's just a different view,
Even
different
now.
structure.
Yep.
So
There's even more to know now.
yeah,
Yeah.
So in fact, we do it all the time, almost every day. And you never know what you're looking at online.
Right.
So you Google something and you get some ad that shows you one side of it.
Yep.
I know we have a new thing we do now and
Yeah,
blah, blah, blah.
ChatGPT and
Yeah,
stuff,
Chat
yeah.
GTP. I don't
Right.
even turn Google on anymore.
You call it I like it. ChatGPT. You call
Yeah.
it DTP. I like it.
Oh yeah, I love the
I like
DTP. Right. I got a couple of those coming out.
I love DTP. No, yeah, for sure. Yeah.
Yeah.
But yeah, I remember back then we would do the Just the Facts.
Yeah.
Remember that product? Was that InterFirst? I was there when
yeah.
it was just there. It was just
Yeah.
ending though, because people had taken advantage of it. Where like all you had to do was send over like a flood cert and a 1003, and they gave you a full loan approval.
right. Yeah, I mean that was something else.
That was crazy.
They had it easy.
Credit score, that was
And
it.
Everybody
Yeah.
got
You didn't
everybody
have
got
to
a
work,
loan.
you
You
didn't
don't
have
have
to
to
do
do nothing.
Yeah.
No appraisal, no
I owned a
income
house and I had
waivers.
a credit score. Or I
And you
had
had-
a pulse. That was
Right,
really
right,
it. Yeah, for a while there.
For loans, I mean, we would do if you had a 620 credit score, you were getting 125% LTV basically. Oh, so you were borrowing credit above the value of your home. And that was
Stated
it.
income where you had
Oh, stated
where you
income
couldn't
is
make the payment if you
ridiculous.
wanted to. The payment was higher than your Social Security income you had coming in or whatever.
Stated income was wild. InterFirst was probably the wildest, but I was only there for like a month, and then that kind of just slid
Before that
away.
fell apart?
Yeah, then they started to make you run findings and all that stuff.
Yeah.
and then you left, and then they had, I think Brian, and I forget Brian's last name, and then there was a lady, a young girl. She was doing the findings for him, and you'd bring the loan to
Annie,
them.
or
Ann,
Ann,
yeah,
yeah,
you'd bring
yeah.
the loan to her, and she'd run findings for you,
Yeah.
and then tell you what you need to get to them,
Right.
get it to them. But at first, it was wild. You didn't have to do findings or nothing. It would just be basically
know-
a 1003 and a fax.
I've actually been doing it prior to the credit score.
I mean, at least that's still stuck around though, right?
Yeah.
Being able
It's
to
still
just
here,
run
right.
your findings, get an automated approval and say, look, the underwriter is going to accept it based on these terms. So as long as I got the income correct, the credit's correct, there's no issues, with that, you're going to have a loan as long as the appraisal supports it.
Well, they were running Fannie and Freddie back then. Then you're saying?
Yeah.
Okay. Because some places, I think where I went, we weren't even approved Fannie and Freddie. So until the
Well, that place we're at, they had everything. Like people don't realize, like I'm sure a lot of people didn't realize, but we had credit lines back then.
Yeah.
we were doing correspondent lending with not with I think D1 and
Yep.
Flagstar.
Yep.
So they were doing correspondent lending off credit lines well before
Was
that
it
was
Dewey?
the thing.
I remember him.
No, we weren't using. Oh, you're talking about Dewey.
Dewey Cheatham and Hal.
Yeah. No, yeah. So they
I like
they
him,
were
but
early.
I like him,
They had
by the
Fannie
way.
and
That's
Freddie.
true.
Right. Yeah.
Yeah, I like that guy though.
Yeah. But they had a lot of. The mortgage loan had a lot of stuff that a lot
did.
of places didn't have beforehand.
Especially in that time frame.
Yeah.
I mean, they
had
were
FHA,
big.
they had VA.
I mean,
So
what, 50, 60 LOs? Multiple states.
big call center.
Yeah.
Yep. But yeah, like underwriting back then, I remember like they would just waive stuff, or you change it to all right. Just I don't want to give conditions 13, 15, and 18. Well, 18's pay subs. Change it to stated. Give me the same rate.
Right.
All right.
Well, yeah, that was what it was. The competition for that. So no one even used Fannie.
Because they had
and
so
Freddie.
much profit built into those
Right.
non-subprime loans that they didn't care. They would lose a little bit of profit to switch it to stated, but they were still making a boatload of money at that same rate.
And then August 31st came. 2007.
Yeah. It was
At least
7.
that's when we knew about it. The newspaper.
Yeah, a lot of
was-
people didn't know about it
newspaper
until
was September
2008.
1st.
That's what I tell people. I was like,
Yeah.
it was 7. I totally remember.
No, well, we had to call people and tell them they didn't have a loan.
Uh-huh.
And in fact, you and I were together. Oh, what do you mean I don't have a loan? I'm already closed. I'm funding tomorrow. I said, no, you're not. Call your congressman. Don't yell at me. Yeah, I don't know what to tell you. And then that's when
the best about those, you get the calls.
September.
Yeah, we're fine. Don't worry about us. We're good. Or you're
Yeah.
calling, hey, I got 30 loans. I'm going to move to you guys. I closed them, but they wouldn't fund them.
Right.
Can I trust you're going to close them? Yeah, we're good. We had a call the other day. We're fine. You'd move the loans. Boom, they go out of business. You'd be like, geez, I just called you 2 weeks ago and you said you're fine.
Yeah, I remember just that list growing, coming into the office, and it was almost,
The impo meter.
yeah, you would just pull up the list, like, oh, another lender gone. Oh, this one's done too now. So, It's
Was it-
getting smaller.
Wasn't Deutsche Bank, they pulled out and that was everybody just from there
So-
buying those securities.
There was a lot of. It was just wild. Every day you'd come in 5-7 lenders go to business.
Yep. Crazy.
Yeah, it was wild. Did you guys? I don't remember seeing any warning signs. People are like, "Oh, did you ever see any warning signs?"
Well,
I
yeah.
don't remember. We got an early warning sign. I know the warning signs I seen. Were
No,
like,
the
how
warning
is-
signs were the loan itself.
How is this person getting a loan?
Right, yeah,
Those
that's
are the
what I'm talking
warning
about, yeah.
sign, like,
Stated income
The
on
ones
a
that-
Social Security income, so the payment's higher than their. How could they possibly repay it? You know, it's
there's one that
impossible.
we didn't do a lot of, and a lot of people did a lot of. Was the
option.
pay option arm.
Yeah.
and that one was like, oh, this is going to be a mess.
Yeah.
because these people were thinking they were getting the 1% rate.
Yeah.
I
And in
know.
all reality, that was just one of the options you get for a little
That's
bit of
because
time.
their loan officer was telling them that too.
Uh-huh.
You know,
Yep.
You know, I really didn't believe in that product from the start. You
Yeah.
know, it's
No.
just me personally, just my conscience. Like I know a lot of people that made a ton of money. Some
Tons.
companies are around and existing today just because of that program.
Yep.
And I just couldn't get behind it. I just didn't feel comfortable with the you make the interest payment, or you can make the less than the interest payment, or you can make the principal payment. And you know, everybody elected to make the less than interest
less,
payment. You know, where they were rolling the negative over to the balance of the loan, and eventually in 10 years it was going to come due.
Yep.
So even if the housing market didn't collapse, that loan was going to come collecting anyways. You know,
yeah, you're relying on human beings.
And a lot of the ones we did were the 100% cash out fixed rates. That
Yeah.
was literally like 85% of our, 90% of our.
Well, then the 327 game. Well, I think it started with the 228.
We didn't do many arms. Like I don't remember. Like I remember that when we got audited, like our programs got audited by a bank we are trying to get set up with. It when we had started that, we left the mortgage zone and started that group.
Right.
And I noticed they came through and they're like, "You don't do many arms," and we're like, "Yeah, we don't do." And they approved us because of that. You know, we didn't do many arms because they thought of those as risky products.
sure.
Oh, when
But-
the margins, 7%,
Yeah.
yeah,
It's crazy.
8.5%, and in your note it says your rate can never go below your initial interest rate, but no one reads it.
Yeah.
And the loan officer included didn't know, had no idea.
Yep.
Yeah.
Yep. Those are wild times. After the crash, that was the craziest. I remember having to be part of firing just a mass amount of people.
Well, we were there together.
Sure.
Yeah. Yeah.
Yeah,
You
it
were
was
there
me,
too.
you, and Dave.
Dave
the
Co-
last
yeah,
one's left. Dave Cox.
Yep. There was I remember having to get rid of a lot of people on that one. Yep. It was just, I think we had like 250 people and we ended up with like 15 after it was all said and done.
Right.
And then just having to run to FHA. I remember that was the big loan after that was the FHA cash outs and the FHA refis because that's all you had. We didn't have our
We
FHA.
weren't FHA approved at the time.
No, we weren't.
Right. Yeah.
That was our biggest mistake.
Right.
We didn't get FHA approved.
You know, if you really think about it too, it was just, my opinion, it was just being unfamiliar with the product. So as a whole, as a group of, you know, in the mortgage industry, everybody was selling the subprime product because they didn't want to take the time to learn the FHA product, where the FHA product would have filled in for a lot of the subprime product.
Yeah.
Had we actually learned
yeah,
what
they
the
were cash out
FHA
to
was,
Well, there was that
6.5
one guy, won't say
or
names, but
95.
there was the one guy that was killing it on the FHA.
sure,
And then doing arms.
Right.
Stepping them down. And
Right.
Or not arms, doing streamlines.
rate reductions and stuff.
Rate
yeah.
reductions when the rates went down, doing a ton of streamlines.
Yeah.
So he's doing a bunch of FHA cash outs and then taking them and streamlining them as the rates got better and killing it. I
Sure.
mean, doing a ton of fees a month because back then we went off fees, of course, but he was killing it. And that was one thing that, like, it was 05, I think, is when it all changed, right?
Mm-hmm.
When they stopped requiring like soil
Well,
samples. and crazy
well,
stuff.
Yeah.
in the fees part, that was illegal from the 1940s, and we still did it until 2000. I mean, not we as individuals, but companies,
Companies, yeah.
did it. Equal Credit Opportunity Act's been around a long time,
Right.
Yep.
so
Yeah, so that was wild. Like the FHA, we ran place to place for FHA. I don't know what happened to you guys, but I know with us, we would get in a place, we started doing real well, they'd go out of business. We went to another place, they'd go out of business. I think me and Todd didn't get business cards until last year for the first time since '08, because literally there's a spot in the Rockefeller Building downtown. 4 times in 4 months, we had to go there and get business cards. We came to a place, did well, went and got business cards, went out of business. Moved to another place, went there, got business cards, went out of business. It was like 4 in a row. And then I'm like, I'm never getting business cards again. And we never did until literally like a year ago.
In a time you don't really need business cards.
Right.
You
Back
can just
then you
send
did
it
it, right?
digitally. You
I
just
think I have 2 of them. Yeah, I mean,
Oh, I
actual
know.
2.
I know.
You know, not 2 different ones. The actual 2 cards.
2 cards. Yeah. It was wild. That was a wild time. I remember going place to place and then finally, going to, I think we went to that first Ohio for the 1st place, and then we all ended up kind of back there again. What did you guys
I
go?
came after it was you guys. It wasn't First Ohio anymore.
Yeah, you were at Flagship, weren't you? Right. Mm-hmm. Yep. You were there for a while, or?
Yeah, a little while, and then the heart program came, and then
Yep.
that's when.
Yep.
Yeah.
What about you? Where did you end up going? We were talking about that earlier.
So I had started up my own branch prior to the housing market collapsing.
Yep.
America's Lending Solution,
Yep.
ALS.
Yep.
And unfortunately, it only survived for about a year. And then after that point, just kind of like you mentioned, a couple of stops here and there, trying to find the right
Place.
connection. It's not a matter of like, it was never always a problem of finding a job. It's always about finding the right job.
Yeah.
It was easy to be able to leave with your experience and stuff, and people will be knocking on your doors to come work for them. But if you don't mesh good with the business and the structure and upper management and stuff, it's just wasting time.
Yeah. It was
When was
tough.
the last time you actually had a resume created?
Oh God, I don't know.
I don't
It
know.
never, yeah,
I don't
it was
know.
never an
It's
issue.
only been a formality of like, I need a resume for us to hire you.
Right, if it's- yeah,
Where you're already
check the
hired,
box.
we just got to put it
Right,
in the
you have
system.
to check the box. Right.
Especially with banks, they're required to have a resume on file.
Yeah.
Well, that would be the place when we go to banks, they'd make us put those together. I remember that. How do you think the crash changed the way you did business?
It confirmed everything I already knew was coming. Number one,
Yeah.
and so it allowed me to study the programs more. I know what.
I was about to say that.
And then it made me better. So I mean, obviously, it made the industry better.
Yep.
You know what I mean? But as an individual, now all of a sudden it wasn't just a matter of here's your your rate that I couldn't stand. I would tell them this loan sucks. If you take this loan,
Yeah,
they
you would
take
do
it
it.
anyway because they couldn't help themselves. If you don't give it to me, someone else will. Okay, here you go.
Yeah.
So after the crash, I hated it so much beforehand. We actually went down to the county. I'm talking about the counties. This is before the internet, just before the internet, or when the internet was just coming out.
Yeah.
Really couldn't get all the information. We might have got it digitally at that point. I'm sure. No, we did get it digitally, but we would print out your note that you actually signed and highlight how crappy it was. Highlight, that your margin was 7%. It can never go below the original interest rate. It's an adjustable rate, so it's guaranteed to go up. It was condensed, and that wouldn't be on the note, but it was condensed. And then we'd highlight their signature and mail it to them. They'd call back. They're like, "Where'd you get my signature? That's not my signature." I'm like, "I got news for you. See the notary right next to it? I'm like, you signed that thing, and that's your loan." Now we can help you get out of that loan,
Yep.
but that's what you're in. So I had always hated that loan to begin with. It was just all the industry, that's all America had, really.
They were going wherever they wanted.
So
Yep. If everybody's offering it, you got to offer it.
yeah, it's other than
They'll
that, you go do
somewhere
something else for a living.
Yeah.
You know what I mean? So
That's it.
So then ultimately knowing that, and then when it crashed and came back, and now we're, you have to learn Fannie, learn Freddie, and all the changes that happened over from that time till now, even.
Yeah.
Like we have changes just 3 months ago, or last month.
Seems like a change every
Yeah,
time.
I mean, at least in some addition or a different way. However, post crash, you couldn't even get things underwritten because it seemed to me like they were afraid of their own shadow because they get blamed
Yep.
for everything.
Yep.
Being an underwriter. So that was difficult in trying to, because it's an interpretation. Everybody thinks our industry is black and white. It's not.
Right.
It's
yeah,
an
after the recent
interpretation of a
run of-
guideline.
After the recent run of buybacks by Fannie and Freddie for variable income, everybody's was a variable income hawk for
Right,
a
right.
year.
Yeah,
You
so
know what I
it still
mean?
happens.
So it
So
still
it's-
happens. Yeah.
It's great. It gave a mindset that I've taken on until now, to continue to learn and stay on top of it. I know you as well, but in any event, that's me personally.
Yeah, that was me too. I remember that I was part of the decision of not getting FHA. I was on another podcast and it was literally about like a decision you made that ended up being a failure that changed the way you do things and ended up being a success. And that was one of the things I talked about is like after that, I was like, I vow to know every product inside and out.
Right.
Because I
Well,
screwed
and
this
that's
over.
what we do, though.
Yeah.
Ultimately, and that's also the curse of what we do. Because it's impossible for and I don't want to pick on a younger kid, to come in the industry and know it all, even with AI, even with the ability to search it, and the things that we use, tools we use now, they still don't know what they're reading.
Yeah.
So they need guys like us or gals like us or human beings like us. They can bring it to and interpret it for them. And in fact, that person's you.
Yeah. Sure.
Right there.
Yeah.
So, Mortgage Zone and with their structure, with their pricing managers,
Yep.
truly what they were trying to do is they were trying to create salesmen to sell and then keep them, controlled by not allowing them to educate themselves on
Yep.
the product, to learn the business and everything else. So they wanted you to bring your product or your credit and everything else, and then he wanted the person to tell you what to do with it instead of you actually learning. And the example of this is just evolving yourself and learning more products and learning. There's always something new out there. I mean, look at the day we're in now and the loans that we have
Yeah,
available.
there's so many new ones too.
It's crazy. It's like 2 years ago, we never would have thought this was coming.
Or coming back.
Yeah. So
Still coming back in a responsible way. Non-QM's coming back in a responsible way.
Sure. Yeah.
You
Yeah.
actually have to have bank statements, and not just pretend like you have bank statements on a bank statement program. They actually have to have deposits. That's how it started out, by the way. It started out like this.
That is how it started.
It
out.
bastardized
Well, that's the
itself
only
later.
fear is that's how it
It's
did
going to go
start
back,
out.
right? Yeah. Well, we're human beings. We never learn from our
We never
mistakes.
learn from our mistakes, right? Yeah, I hear you on that one. That's the only hard part. But yeah, I agree. I think that's what they were doing there. They're trying to keep everybody a little bit undereducated so that they can,
Yep.
But
then
That
then
model
again,
still exists out there.
oh yeah, it's still tons of companies around that.
yeah, we know a couple.
Bigger ones, right?
So
Ones people know.
Yes,
You know.
sure.
No acronyms here.
Yeah, for sure. Yeah, but I mean that was a big thing. I mean, then rebuilding in 2010, I think we went to First Ohio. That's where we all ended up back again
Circling
together.
back,
yeah, you were at Flagship, then you came
Yeah,
over.
and came over. Yeah.
Yeah. And then we started doing that hard program, running it hard. You had that huge website, which we talked about in the previous podcast. And we kind of ran that hard program pretty heavy for a little bit.
That evolved from sending them their notes.
Okay.
Yeah, I mean, that's how you went from there to there.
I just remember you telling me about it on a golf course. And I said this in another one. You telling about me when we were golfing at Boulder Creek. Totally
Yeah, I remember being at Boulder- we were at Boulder Creek, yeah.
and that's when you told me about it.
You drove that minivan back then.
Yes, I did.
Yeah, I remember it.
Oh, I love that.
Yeah, me too. I did too. I absolutely loved it.
Right, yeah.
I was so sad to get rid of it. But yeah, so that's when I remember learning about Hard Program from you at Boulder Creek, and then we kind of ran with it. And then you did a really good job with that website and was killing it, like we talked about in the previous podcast, where it was killing it, and it was it was beating the government site, and then the Google forced it to go below it.
Yep.
That
Oh,
was
yeah.
crazy. And then we just rebuilt. I mean, that's what we kind of did from there. I remember just rebuilding our groups.
Yeah, and rebuild it with education instead of, the way that was before, so,
Yeah.
I know it's keep it simple, stupid. I'm aware of that, but at some point in this industry, you can't help people if you don't know all the ways to help them.
Yeah, correct. Yeah.
So and if I wasn't helping people, I'd do something else.
Yeah. I remember that's when we started to use technology too. We started using CRM. We had that buddy of yours create cats for us.
Yeah. He was a programmer.
Yeah. He's actually the one that told us about, after that, but it told us about Bitcoin.
Okay.
He was talking about Bitcoin in the office too.
No, yeah, he was ahead of his time as far as all that stuff. He was
He was a smart kid.
He would program website and anything. Now it's AI does it. It's so, but you got to remember the time when this happened. This was 2010, 2009.
Yeah.
So it wasn't.
I remember that's when they put in all those changes for comp. That was a huge thing. I remember couple groups, there was a bunch of different ways people were doing it, but like the two popular ones were basis points like they are today. And then the other one was salaries. And so they would just adjust your salary every quarter.
The
I
Dodd-Frank.
remember, because of Dodd-Frank, because of the change.
Ironically, they took Dodd-Frank, but it's been around since the beginning. Since whenever the Equal Credit Opportunity Act came out.
Well, yeah, 2010 is
can't-
really when they changed the rules.
That's when they
of
changed it.
Dodd-Frank.
Yeah, right.
Where they said, hey, you can't be tied to profitability of the loan anymore. I remember people freaking out. This is the end. And we're going to blah, blah, blah.
You know, it just weeded out though the bad apples of the
It did.
industry, really.
Yeah.
You know, and the strong survive,
Right.
right? So,
We either adapting or you're left behind.
yeah.
Yeah. And I think those two options were the ones that we ran with. And then they realized the salary option, it's a killer. And so a lot of people got away from that and everybody kind of went to basis points, which it is now. But those changes did make a huge,
I still have to tell. I still tell people about it now.
change to the people.
You know, they're like, "Well, what do you charge?" I'm not allowed to charge you. We aren't allowed to charge you. Like the industry is not allowed to charge you.
Yep.
We charge you for things we do, processing and underwriting.
Yeah, once your margin's set, your margin's
Yeah,
set.
that's it.
Yeah, yeah. You can't change that. But that's what people don't realize. Back then, though, that's what we used to run off of.
Oh, I know.
Now everybody talks loan amount, but back when we were first in it, was all fees before Dodd-Frank.
10 points.
I did 50,000 in fees this month. I did 100,000
United
in
Companies
fees.
Lending, we charge 10 points on every loan.
Yeah,
And you wonder why it was predatory.
I know. I don't wonder.
we know.
Hey,
But yeah, that was the big change, and then everybody started talking in volume, like, "Oh, I did,
Yeah.
2-3 million in volume." But back then, it was all fees. I remember,
Right.
like,
Yeah.
when I talk about that, I'm like, "Oh yeah, this guy was doing crazy numbers. He was doing, 150,000 in fees a month," and they're like, "What? I don't
Right.
get that. That's crazy." But yeah, that was a big boom for us, and then we grew, of course, and then that kind of went to the wayside, and then there were some adjustments. We got smaller, and then we had left, and we went to CBC, which then we came and worked back there again,
Right.
at CBC, and then we did some big stuff with the VA stuff. That was a good little run too. We were doing big numbers.
that
with
one's
the VA
not
rolls.
over for them. It's starting to come back,
Yeah, I would agree. It's
Yeah,
going to come
yeah.
back soon.
ultimately.
Yep.
If they bought a house in the last 5 years, I mean, it's damn near here already.
Yep. That was a good little run over there with that.
That's the smartest loan in America, that VA Earl.
Yes, it is.
Yeah, I mean, in the end, I don't need another appraisal. I don't need just verify I have income, I'm making a payment.
Yeah.
So.
And then they had the COVID. I mean, that's where we came back again together at Home Decision during
Oh,
COVID.
yeah.
That was wild. We started that company like 2 months before, felt like 3 months, 4 months before COVID hit.
That was also another time when
we
the
started in
house was on
January.
fire and we're running back in. Instead of running to another industry.
Dude, at first everybody was nervous. I don't know how you guys were, but I was on more calls about it's all gonna go crazy. We're gonna have huge foreclosure rates.
Right.
Like, it's gonna blow up again. People were scared to do forward mortgages for a little bit. I don't know if you remember, but like the margins that these correspondent lenders were putting in when you would sell them were just atrocious. So if you weren't selling direct, you were getting smoked by the investors
Right.
of the world for like almost 3 to 4 months. It was really high build-ins that they were putting in because they were scared to death that there was going to be a huge foreclosure run. And then the government stepped in and did what they did.
Yep.
And then we had the huge refi surge.
Well, they're remembering back that the foreclosure before was,
Yeah.
these were actually underwritten with income. These other ones, they were
Right,
not.
right.
Well, I think the lenders, though, saw a disaster coming, so they stepped in right off the bat and said, we're going to do a COVID forbearance plan.
Yep. Yep.
And they just took anybody that was out of work or missed a payment, and they put them on a forbearance for 12 months.
The same
18
thing, though,
months.
it got bastardized too, because then they just took anybody that, even if they weren't out of work.
Oh, yeah.
So that program got,
It stopped the,
the concept great, the implementation.
yeah.
Left
I mean, a
lots
lot of
of
people took
be
advantage of it
desired.
for sure.
Right, yeah.
But at least it wasn't flooding the court systems with foreclosures.
Right.
Yep.
And that was the achievement that they were going for.
I agree. I mean, and huge refis. I mean, and if you look back at it, it's like, oh, it's obvious that what's happened today would have happened because who's going to sell their home when the rate's 2.5?
Yeah.
I remember we gave someone a 1.875
Right.
on a VA Euro. I was like, this is ridiculous. I think that rate was only available for like a week or two, but that was insane.
1.75 was around, yeah.
But
Especially on the VA side.
it's crazy. Like people don't realize that this was going to happen. But you look at it, but they had to do whatever they had to do.
Well, they kept it there for 5 years.
Yeah.
Instead of the flow up and down, even flow, keep it here. Now all of a sudden everybody's here. Why do I want to go up here? The reality is you probably should. Your 3 kids are all in college. They're all out of college by now. They're all living on their own. You have a 5-bedroom house.
Right.
and it's just you and your missus or the mister. You're turning the heat off in half the house, all because your rate's going to go from 3.5 to 6.5.
Yeah.
They think that's a huge margin. Look at your credit cards.
Yeah, for sure.
They're at 24. They were at 7.
They were
Yeah,
really.
but that's okay.
Yeah.
But I don't 3%.
Dude, it was.
I can tell you the funny story about it. I told
It was
the guy.
impossible to hire during that period. Go ahead.
No, when I told the guy to when his mortgage statement comes in the mail, I said, "What I want you to do is buy a picture frame." I said, "Well, and what I want you to do is I want you to frame that mortgage statement because it's got your interest rate on it, which you love so much, and then hang it next to your family photos on the wall because you love that interest rate more than you love your family." Because the guy was going to save $2,500 a month because he had 26 credit cards.
Oh, jeez.
26. Can you imagine writing 26? I say writing checks, but even making 26 payments online.
Yeah.
I would lose my mind. I'd miss one for sure. He didn't miss them. He had 0 times 30. I'd miss one just to miss a $10 payment. I mean, not on purpose, just because I couldn't follow 26 payments. And he chose to not save that money. And I remember telling him, I said, well, if you would have got a $40,000 a year raise at your job, you'd be right now, you'd come home from work, high five your wife, you'd be jumping for joy. You guys be going on vacation. I said, but you're coming up. I said, but unfortunately, because it's tied to that dumb interest rate you have, you're saying no. He laughed. I mean, he took it. I was busting balls on purpose. He laughed and he kept that. And I'm like, good for you, man.
That's what it is.
Write all those checks. I don't know what to tell you. Yeah.
No,
So,
for sure. We got the workman's education. That's the difference.
mhm.
Education's set up for everybody to be employees and not to be financially savvy. So that's the issue with people.
Yeah.
Yeah, I remember during that period it was hard to hire. I remember when I always tell this story. We offered an underwriter a $25,000 sign-on bonus and a $220,000 salary, and they turned it down because they got a higher payout. I was like, geez, couldn't hire underwriters. No one would leave. There was no employees to hire because it was just tough because everybody had such big pipelines. Why would they leave? Right?
Yeah.
They're not going to quit their company and go
Right.
work somewhere else with a $2 million
Proven
pipeline.
stability versus.
Yeah, it was
And,
crazy.
and the underwriters too. I mean, they have it made because they can work remote anywhere.
Oh, they were
You
getting
know,
killed.
they're getting people in New York, California,
Yep.
wherever, hitting them up for employment for the same
Yep.
reason.
Yep.
So
Yep. And that was the days of like the 3-week underwriting turn time
yeah.
Yeah.
in some cases because of how crazy there was. So many loans, not enough
Or
underwriting.
at least that.
Yeah.
Yeah. Especially when we were a broker for a while. It was even more than that.
Yep.
Mm-hmm.
Yep. And then we had that post, then they start raising the rates and then it was crazy. No one wanted to sell their home. People still wanted to buy. And the rates are still that way.
Mm-hmm. We
Here
didn't stop
are.
having kids. It's humans. Yeah. So this 2-bedroom, and now we need a 4-bedroom, but no one's selling their houses.
Yeah.
Or their 3-bedroom
Yeah.
or what have you.
It's just a big mindset change,
Mm-hmm.
and you got to change the way you do business. It was wild. What do you think you learned the most in this recent change?
Just stay on top of things.
Yeah.
As far as stay on top of what's out there, what program changes, especially in a purchase world versus refinance world, even though we do both. But in a purchase world, you can't miss because if you miss, they're not buying that house. They have their family packed up, ready to move out, and then all of a sudden, in a refinance world, if you miss, hey, guess what? You can make a payment next month.
What about you?
It's just I would think continue to build your relationships.
That's it.
Not even just your customer relationships, your referral partners. The evolution of mortgages when we started this conversation out with the cards, pulling up your database from the county courts, and then it went to over the phone, and we had overnight packages, and then it went to telemarketing departments, and then it went from telemarketing to online internet. And now we've run full circle and we're down to establishing the relationships. And the funny thing is it's the most natural way of building, partnerships. You go somewhere, you meet somebody, you introduce yourself, you explain who you are and what you do, you find out what they do, and maybe there's some sort of, connection or interest. I would say the evolution of it, just continue to build. The most common thing is building partnerships and relationships.
Yep.
And Everything
we're
else
building,
always
we're building
works its
those
way,
through
way
trust
out.
versus,
Yeah. Yep.
versus just selling somebody and never talking to them again.
Right.
We're building those through
right.
trust.
Retention, the customers you've already done business with, check in on them, make sure they're good. Find
Yeah,
out
that's
if
the other
they
thing that
need
people
anything
don't do
else.
enough of, yeah.
So back in the day of the phones are ringing, you don't have to call out. There was so much business coming in, you didn't even have to call anybody. Nobody worried about that retention business. Nobody worried about the referral business or the partner business because the phones continue to ring. But with that type of partnership and retention, I think you can maintain a stable, steady business structure.
Yep, I agree with that. Yeah, that's the one thing that I think a lot of the younger guys miss out on is they think that they have this really strong skill set, but they don't use it in today's market. That's why a lot of the guys are leaving. Guys and girls are leaving the industry that were call center people or people that were on the phones a lot.
It's actually work. It doesn't stop at 5 o'clock.
Well, now you got to know what you're doing.
Right, and then on top of it, you literally have to know what you're doing.
Yeah.
If you don't, then you're not valuable.
The sad part though is a lot of the people. There's no way for them, and there's no way for whoever's going to refer you business to know how good you are. And most of the time they use social media to do that. I use this as a joke. I say, if you want all the referral partners to die, have them choose their loan officers like they choose their doctors like they choose their loan officers, right? Because they're like, oh, no one goes, oh, this doctor's on social media all the time. He does really cool, funny videos. Look how
Right.
funny this doctor is. I'm going to use him for my hip surgery or for my heart surgery. That's not how it works.
Right.
Right, because you want a doctor that knows what they're doing. And I think sometimes the referral partners are looking for social media experts, which usually means you don't have a good loan officer. Mm-hmm. And you're working with someone that doesn't know what
And
they're doing.
honestly, in their world, that is actually good. But in our world,
For them, 'cause they're marketers.
Because they're marketers,
Yeah.
right? Yes, yeah. So in their world, that's good. But in our world, we marry the two.
Yeah.
So
I mean, we need to get better at it. I need to get better at social media. It's tough. But when you're knee deep in 15 files, it's hard to take a break.
right.
I mean, right now I'm trying to fix a loan for someone else right now with the insurance policy and all this other stuff, and I'm here. So it's like, it's tough. And I'm like, man, I need to fix this loan. But like, it's tough to do both. And that's the hard part is like, I think that's the biggest change as I see is one, to keep a relationship, you have to be really good at what you do. Because one
Well, if
bad
they
ball,
understand
you lose
that-
that relationship. But to get a relationship, it's tough because you got to also be a social media expert and be at a bunch of networking events.
Sure.
Yeah, those are I prefer my house or driving range.
Right. Yeah, for
You know what I mean? I'm not big on the networking places.
you gotta
Showing
do
up.
today's
But
world, right?
ironically, I have to.
I know.
I'm just kind of the first one to leave.
You can't just be really good at your job. Like, you know what I mean? And people just know you're really good.
Well, that's also a curse, because if you're not really good and all you do is the slam dunks, the easy ones.
Yep.
What happens when they lose their job? 3 weeks into a 4-week purchase. How do we still get this thing closed?
Right.
And those types of things. And that's unfortunately that you and I are, us are cursed with, because then I have somebody on the other side that doesn't even understand all that we've gotten here. Yeah, they were pre-approved, went through underwriting, and then they got smacked in the face.
Mm-hmm.
Instead of saying, "Oh, by the way, this is dead for everybody. Why don't I fix it for you?" But it might take me another week because now they gotta, I gotta wait for them to get a hire letter, and then pass the drug test, pass this test, pass that test, and those don't happen in days.
Yep.
Even though, what do you mean? They got a hire letter. Oh yeah, what I mean is read that hire letter. I know no one reads anything, but when it says subject to drug test, subject to this test, that test, until those boxes are checked, they're not hired.
Right.
Yeah, I don't think they understand the difficulty.
That's
When
just one example.
When we bring realtors on as loan officers, they're like, wow, you got to do all this stuff. This is crazy. And I'm like, yeah, you guys don't get it until you come over here and see how difficult it is to get someone approved. It's not like, hey, let's talk. Good, perfect, boom. You know what I mean? We're approved. It doesn't usually work that way.
It does if that's all you take.
Yeah.
Which is fine. I mean, but because you don't know anything else.
Yep. Yep.
And it's not no disrespect to them. There's a lot to know. You have to really dedicate yourself to learning and knowing it. So
What do you think hasn't changed in the industry?
people
I agree.
are still people. I know that we
Yeah.
think because the internet's around now that people are different. They're not.
Yep.
Our brains only have so much capacity to be something different. So they're still people.
Yep. Yep. Yep, I agree. The people haven't changed.
All right.
Yeah, I think that a
Greed's
lot of
real.
people. I think that that's
Yeah.
the other thing is I think that a lot of the programs are starting to leak towards the way that they shouldn't leak to. But there's a lot of great products out there they've come out with. You just got to make sure that we keep them in line.
You know, if you ask me, I think people's spending hasn't changed.
Well, that's for sure.
You know, it's just it's probably
That's for sure.
it's probably
It's even
the
more.
one thing that's gone.
Credit card
Yeah,
debt's at an
right.
all-time high right now.
Yeah.
We're not in that market yet, but you know, we're going to see that. You're going to see where people are.
Well,
are
and that goes
getting
a
tired
long
of
way.
that.
Yep.
The people are people. That goes a long way in why they should have home ownership early. You know, especially in this particular last 5 years. Let's say 5 years ago you bought a $200,000 house, and today it's worth $300,000, and you couldn't get out of your own way, and you just kept spending credit card debt. Now all of a sudden, you do have an avenue to pay that off and correct yourself based upon you did buy that home 5 years ago.
Yep.
So the earlier they can buy a home, the more equity they can build, the easier life's going to be down the road. And then again, once the perception of my interest rate comes down, and because credit card debt's not exclusive to 20-year-olds.
Yep.
It's not at all. That's the perception out there. But if they were 20, now they're 45, they still have that credit card debt, and they've owned that house those 25 years. They do have that one thing. It's called equity. So you're basically paying the principal down on that house and putting money in a bank account.
Yep.
That when you need it down the road, you can access it. I don't care if your rate's 2.75%, then we'll write you an equity line.
Yep.
And so in any event, that part is understanding it, how to buy a home and getting into a home earlier rather than later.
So we talked about what hasn't changed. One of the big things that has changed for everybody in the world right now is the tech. I know that AI has made some big advancements. I mean, we use it really, really effectively. I've done some crazy things with AI that like building websites, creating marketing campaigns, of course, making GPTs and agents that assist everybody. Guideline stuff. I know
Yeah.
we're coming out with some good stuff here in the next, I don't know, I think next quarter.
It's moving so fast.
That's going to be populating. That's going to, as soon as they upload docs, it'll review the docs, pre-underwrite the file, let you know what you need, recondition the file, push out requests, tell you what loan's the best loan product for them. I know these are big things that are happening right now in our space. And it makes this a lot less manager dependent, which will be great for everybody because then that means more profitability, lower rates, everything gets cheaper.
Sure.
You know what I mean? So it actually makes it a lot better for the client too. So I'm excited for it all. I'm using it. I'm knee deep in AI. I've created some
even-
GPT, some agents. It's crazy.
Even my old dog brain uses it daily. Mm-hmm. Again, I don't Google it anymore.
Yeah, you don't.
Yeah,
That's my thing is like, how's that going to evolve?
I know. We had
I'm
that
assuming they're going to
conversation.
have pays, like when you Google, hey, find me a mortgage guy in the area, there'll be some type of
Somebody paid for it.
pay for it. It'll be
Yeah.
like, this person is sponsored, this person sponsored.
Hopefully they
these
grade
three are
us.
the three that we like.
Hopefully it grades us somehow because I know we'll be up here without having to pay to be up here.
Yeah, we haven't even scratched the surface of what AI is and
Oh,
will
yeah.
be. I mean, this is just
Once we have
this is the
AGI, it'll be
drop
wild.
in an empty bucket. Just wait. Like it's gonna be something else.
When AGI, that and the two things I'm excited for is AGI and multi-step reasoning. So that's where like X happens and it knows to then make this step. And if this happens during that step or these things happen during this step, but then do this, that's going to be real big because
It's learning every time. It's teaching itself.
that takes a lot of the issues away. A lot of people should be recording their screen on the steps they take. They should be decision treeing a lot of their processes because if you're not, when that becomes active, you're going to have to go back and it takes to decision tree a whole mortgage process. That's a heavy lift, especially if you have no screen recordings or no decision trees at least put together. You got to go back and do all that before you can actually.
Well,
make that
we
active.
talked about it earlier about how difficult it is for a human being to even. I mean, and now if we're not giving it the information to evolve, then it's just not going to know.
Yep. So I mean, I'm excited for all that stuff, but I think it's going to make a big change in our industry. I think that underwriting and processing will be more automated and quicker so that pre-approvals can be given faster that are valid pre-approvals and not done by a loan officer who has minimal to low experience calculating income
If not none.
and underwriting a
Right.
file. Correct, if not none.
Right.
And so I think that will alleviate a lot of the issues for borrowers who are pre-approved that then get turned down during the process without any changes drastically on their side, of course. They don't quit their job. They don't
Right.
go get a car, any of that stuff. Those are self-inflicted denials. But I think that should make the process a little bit smoother.
For the consumer, for sure. Yeah, because there's so many different ways people don't understand that. Yeah, I'm 40 hours a week. Sure you are, but you got a bonus, you got overtime. Oh, look at that. What's this thing down here? You've got vacation time. So all those things will be like that.
Yep.
Yeah, it should speed up the process. My vision, if I had to predict, I would say that loan turn times from pre-approval to close will turn into a 2-week process. Documentation will be very minimum, if any. And probably a lot of it. One day you'll probably see electronic closings.
Yep.
Where
those-
notaries aren't even going to sit down and.
Those
as
exist
a
now.
norm.
Yeah, as a norm, right.
Yeah. As the norm. Right now you
Yeah.
can do rounds. We're doing rounds now too, so and e-notes. But he's talking about without a notary, just
Right.
Yeah. So.
Yeah, I agree. I think it'll be a lot smoother of a process. I think that people go from being employees to managing agents, though. If you don't know how to manage an agent or don't know what you're doing, I think that your days will be numbered, or you'll at least have to be a
The human
social
factor is
media
still going to be
influencer
there.
driving to that. A human will have to be there. They'll have to drive it. But there is a whole generation of people that don't. They want to self-serve.
Sure.
I mean, that's a big
That's
change.
dangerous because, especially because I've been dealing with that. What are you really self-serving? You don't even know the industry, but you're going to somehow self-serve yourself into a mortgage, which is very complex. But at some point, AI will be able to point them in the right direction. But I just fear that, where'd the AI come from? Who's the Mad Hatter? Who's the person, not the Mad Hatter, but who's the person behind it?
Well, companies will
The
still
Wizard
have
of
to have
Oz. Who's the
oversight
Wizard of
because
Oz?
AI will review those files programmed by, and again, this isn't
That's
anytime
right, programmed
soon,
by
programmed
somebody.
by whoever the servicer
That's-
is.
that's the Wizard of
whoever
Oz,
the investor
right.
is, whoever's the end owner of that loan, and everybody will have to match it to theirs or use theirs because they're making that decision, and you don't want to buy back because your system doesn't match their system.
Right.
So I think that's going to be the big change. That won't be again not for the next couple of years.
Yeah.
At minimum. I'd see it. Like people are buying clothes on Amazon. I can't even think about buying clothes
Sure.
without trying a shirt on.
Sure.
I do it right now. I'm weird, and this is why I say this. I am a self-service guy. I would rather not talk to somebody. I am like the younger generation where I'll do everything on my own until I know there's absolutely no way I can't do anymore. But I do all that stuff. I buy online without talking to anybody. I try to self-serve all of it. So I see how it's going to be. And I really think there's going to have to be a human on the backside, at least validating that the stuff is happening with experience. And of course, they're going to have some type of social media influencers driving the business because that's literally right now, that's like marketing. If you don't influence via social media, no one knows who you are. We talked about this on the other podcast.
Who
It's
watches
like,
commercials?
we don't brag enough.
Right.
Like we don't. And that's a thing that's going to be a big change. I think that people want to give themselves the out and be like, oh, we'll be fine. People are still going to want to talk to people. Actually, they don't. We have
Right.
people in our office that don't want to talk to a soul. Mm-hmm. And if they could, they would do everything they could via text, chat, email, without talking to people. And those are people that are the buyers of the future.
At least the initial
100%
ones.
agree.
And do they change because they get older? Maybe, and that's the hope.
That does happen.
Otherwise, you better be really good at managing agents. You better be really good at knowing your product. And then you better pair up with someone that's really good at social media influencing. You're not gonna have deals. It's gonna be a different
Yeah,
world.
no matter
I
how
think.
good you are. Yeah.
That's not 2 years from now, but when this stuff gets good, what changes?
It's going so fast. It may be 2 years from now.
Again, I don't know.
Right. I know,
I
right?
know. What tech do you think we have today that you wish you had back in the day?
I mean, how far back in the day? I mean,
Talking
ultimately,
like 2000s.
I say ultimately the internet. Yeah, how's that? You know,
right.
I started
Yeah.
before the internet.
Good call.
Yeah, so,
Internet would be great, right?
right.
Yeah.
Yeah.
Social
We
media.
used to
would be
drive
good,
to
too.
A
every-
cell phone with MapQuest on it. You
That'd be great,
I
too.
used to have to print out my MapQuest and look at a page. Of, where
We
am I
had
going?
pagers. We had pagers back then.
Yeah.
You know, you drove to everybody's house. You FedEx their
Sure.
you know, me and the UPS or the FedEx down at the airport, we knew each other because at 10 o'clock that plane left. I'd walk on the back of the plane just to get my FedEx on there. Literally, I'm not kidding. They'd scan it, boom, it'd go.
Yeah.
You know, so that was how it was.
That is how it was. I remember that too. And then what advice would you give for people entering the industry right now?
Walk.
Take your time.
Yep. Yep,
Be patient.
that's great.
You know, try to learn as much as you can.
That's the one thing I wish people tried more at in this industry. I think we had this conversation in here the other day. And people, they think I'm smart because I know a lot about mortgages, but I'm not smart. I just care about mortgages. I always use the example of John where I said, if you took me and John into a room and you made us, because they used to say that back at CBC, and I'd be like, well, I'm just smart because I know a lot about mortgages and we're in a mortgage setting. But if you take me and John in the room over here,
Right.
who you don't think knows a lot about mortgages, and you turned it into a Lakers, you know, Kobe Bryant quiz show, you're going to be like, that Matt kid is a dummy. He is stupid. Because I don't know nothing about
Right.
nothing when it comes to anything else. It's just, I chose to be in mortgages, so I chose to learn about that. So I would say, like, that would be the advice, is try to learn your craft.
That's the walk. You know, walk and
Yeah,
learn.
Learn.
You know, versus trying to run and all of a sudden you're an expert. Because
Yeah. You
It's
got it.
everything, though,
Yeah.
right? I mean, you want to be a professional at something, you got to do it like 10,000 times.
well,
You
exactly.
consider-
That's you want to be a carpenter. You got an apprenticeship.
Right. So,
Yeah,
you,
so-
you gotta the experience, the effort, you know, you can get a new guy, you know, 2 months into the business, but if he wants to learn and absorb, he could probably know more than some people have been in the business for 10 years,
Yeah.
you know, with his effort.
Yep. And that was one thing too, is like, find a mentor, find someone that can train you and you'll listen to them.
Sure.
Because that's the hard part, is a lot of people don't listen.
Right.
You know, it's super weird, but when a manager says something, they don't listen. But a mentor that they got to pay says something, they listen. It's kind of like the parent thing. They said that parent thing stems from interbreeding, and you don't listen to your parents when you're younger, because you would, back then when we were like cave people, we would leave the tribe for that period when we were in that area and that age, so that we didn't accidentally interbreed with anybody in our tribe that was family members. And that's why you don't listen. That's what they say. I don't know if that's true, but they say that's why you don't listen to your parents when you're like 13 or 14, because that's when you would leave.
You hear them, but you don't listen.
Yeah. And now you're like, shoot, I should have listened to them. But it's the same thing I always laugh about. I always go, you get a manager for free who tells you, or person you work with that's your leader, whatever position they are. You won't listen to that person, but you'll go pay a mentor, you know, $10,000 a year, or a coach
I for a long time.
$10,000 a year or more, and you'll listen to that person. They're going to tell you the exact same stuff.
As long as, yeah.
But that's the thing, is I always say, is like, if you won't listen to your manager, then yeah, pay for a coach. But it'd probably be a lot cheaper for you if you just listen to your leader. You know, it's tough because people just don't. I notice that people don't listen when you give them advice, and they want to find, and that's fine if they want to.
I mean, I understand we have to step on our own, you
That's
know,
it. I think
our
that's
own
what it
snakes, our own landmines, whatever you want to say.
Yeah.
You know, but in the end, you know, I've already stepped on them.
Yep, that's what I would say, is to get someone that you'll actually listen to. If you got to pay them or not, whatever, but listen to them, and actually try to learn what to do.
You know, I 100% agree. I just feel like we're the old group. You know, looking back at
Yeah.
our younger generation
Oh,
of
yeah.
ourselves, you know, it's
I
so
agree.
true too. You know, as I was a younger kid listening to somebody older than me, I would be like, what? He doesn't know anything.
Yep,
You know,
100%.
but I mean, here we are,
Not
you
really
know,
old
talking
guys.
about these young kids. They need to listen.
Yeah.
If they
I
would,
literally-
I would have.
I literally, I think, fought older guys because of that reason.
Right.
You know what I mean? I'm not listening to you.
There's a lot of things I was told from many different people that I wish I would have listened
And there's
to.
everybody sitting at this table has, you know, gray hair and,
Yeah, we're old.
you know,
We're old. Turned
Right.
49 a day ago.
right.
So I give it. It's just that I wish it too. But that's why I say that, because I look back and I was like, man, if I'd only listened back then,
Exactly.
it'd have been amazing.
I think that's how we populated the earth because, you know, we were young and dumb, didn't listen.
It's correct.
Yeah. So
All right, cool. I appreciate you guys being on here.
well, thank you. Yeah.
for
Appreciate
sure.
it. It was fun.
If you guys got anything else you want to talk about,
No, I'm good.
Yeah, same.
awesome. Well, thanks,
That's
guys.
for lunch.
Exactly. All right, fellas. Thank you very
All
much.
right.
Yeah. Thank you.
Appreciate it.